Good afternoon, everybody. A very warm welcome to the Singapore Fintech Festival. A very warm welcome to Singapore if you're from out of town. I've lived here for 13 years. I'm very fortunate, and the energy in this place that I see every year just grows and is incredible. So thank you to GFTN for putting this on. My name is Tim Wei. I lead banking initiatives globally for Fireblocks. For those of you who are not familiar with Fireblocks, we're a global software company, and we provide our 2,500 clients and over 80 banks with a digital asset platform that allows them to securely, scalably, and efficiently operate their digital asset businesses. And what does that mean? It means that we help them throughout the full asset life cycle, from issuing assets or tokenization, managing those assets throughout the life cycle, accessing venues, trading counterparties, and finally custodying those assets. And the wallet and our network is the core of our product. So that's enough about Fireblocks. I want to frame the next 15 minutes, if I can, against something that Bill Winters, the Standard Chartered CEO, said in Hong Kong last week. He said, pretty much all transactions will settle on blockchains eventually, and all money will be digital. That might take a while to sink in. And I'm very happy to say that I've got with me today the CEO of a bank that is at the forefront of understanding how that is going to change transaction banking. So if you wouldn't mind, please, could you welcome Shawn Chan, the CEO of Singapore Gulf Bank. It's great to have you here. Thank you.
Thank you.
If you could start off, would you mind introducing yourself, and if you could tell the audience, why is Singapore Gulf Bank different?
That's right. Thank you, Tim. Hi, I'm Shawn, the CEO of Singapore Gulf Bank, SGB. We are a bank that's licensed and headquartered in the Kingdom of Bahrain. From Bahrain, we serve global investors, institutions, and innovators, covering corporates and individuals. How are we different? Why are we different? And what is our mission? It's simple. Our mission is really to bridge the divide today between what we perceive as traditional finance and digital finance, or DeFi. In our view, that there should not be this dichotomy, right? Why finance is finance, value is value. What technology has done, what blockchain has done, is to bring about a new way to store, to transfer, and to earn value. As we understand it, today that's done primarily through banking, where we are moving value or dollars through centralized ledgers. Blockchain changed everything, right? Today, particularly through stablecoins, that can be kind of read or programmed through blockchain, right? And that's, in my view, true digital money. Apart from that, of course, you have CBDC, but that's going to take a bit of time. Perhaps not everyone will adopt that, but I think today, what is clear is that stablecoin is here to stay, and as adoption is picking up very quickly. So from our point of view, this is the future, right? In future, a consumer, a corporate may not necessarily save, move, or earn value through traditional banking rails or fiat, but rather through stablecoins. So for that, we need the correct infrastructure to do it. There is a common saying that banking is required, but banks are not, right? At the end of it, why do we need banks? It's an infrastructure, right? A safe, secure, and trusted infrastructure to move value. The difference is that blockchain or crypto has achieved is that the promise is that you do not need intermediaries. But I think that's perhaps going a bit too far. It's possible, but for the vast majority of consumers and corporates, you do want a regulated and trusted party to handle some of these things. So from our point of view, this is what we want to achieve, right? We'll provide regular payment rails, regular dollar accounts, alongside wallet infrastructure. So we have one unified place to manage all your value.
Thank you. Maybe I can ask you if there's folks in the audience who work for banks who are trying to decide when to start to work on this journey. Why is now the right time to start on this journey and to have this capability for your clients?
I think just alluding to my other point, I think that the promise of blockchain and stablecoins and crypto on the larger plane has been around for some time. I think what really kickstart the adoption has been the leadership from the US. After all, when you do need regulations to come in place for people to trust it, for adoption to happen, and you do need some form of consensus around regulations and licensing. And we can see that taking place today at a very rapid pace. So looking forward, I think most of the major financial jurisdictions today already have some form of regulation, and it's getting clearer and clearer day by day. For example, look at the Genius Act, right? I think that tremendously changed the landscape. And I think I think Tim has shared as well, during Cybors, that's all anyone can talk about, right? So referencing what Bill Winters has said as well. So I think now the real driver is clarity from regulations and licensing. And I think in a very, very short while, by the end of, in my view, 5 years, every bank would have a wallet sitting alongside a regular bank account.
Thanks. I'm going to ask a question, I guess, about use cases now or capabilities. So where are you seeing the first demand? There's a lot of talk about cross-border flows. There's a lot of talk about treasury. There's even quite a lot of talk about collections and providing those services for merchants. Where are you seeing demand first?
Payments, 100%. I think that's broadly within crypto or digital assets, I think two categories. One is stablecoins, which is primarily for payments, and the other would be infrastructure, or you view it as an asset like the Bitcoin. I think that is still coming up, and it's still very uneven, but where everyone is agreed on is stablecoins payments. Today, what do we have if you want to do cross-border transfers? Largely, you're moving through cross-border banking networks. You rely on SWIFT to do so. Say from New York to Singapore, say from London to Hong Kong. Those are very established rails, right? You can initiate a payment and with confidence expect that to happen within maybe the same day, 1 day, or maximum 2 days. But if you're moving value, say from Bahrain to say Colombia or to Panama or to Papua New Guinea, right, for example, very unfamiliar corridors, now that's a black box. Right? You don't know how many hoops you have to jump in between, when you reach, how much that would cost. And that's very disruptive for businesses, right? Where we thrive on certainty. So if you do stablecoin payments, it's near real time, right? You can skip through all the corresponding banking network and can get straight to the source. So I think certainty and speed is a big thing. The other thing is uptime, availability. If you move value today through the regular corresponding banking network, you're subjected to daily cutoff times, bank holidays, weekends. I mean, the world kind of got used to that, but there's a lot more efficiency to achieve if we could do that 24/7, 365. And that could bring significant savings in many areas, right? Say if it could bring down collateral levels because you could settle on the weekends. You could increase the velocity of your business, say if you're payment companies, right? So the only way to realistically achieve this is through stablecoins. So I think we are only now starting to realize the benefits of all of this coming through. And today, 1 year from today, I think we'll have even more use cases to talk about.
Yeah, I'll just add to that as well. I think it's important to know that for the first time in the history of regulated markets, you can now move value meaningfully cross-border without banks. So banks like Shawn are forward-looking and are understanding how they're going to remain relevant by working with stablecoins, which is the vehicle that now non-bank entities can use to transfer value. What's equally interesting is that a recent study, I think by EY, said that even though it's possible to do that with non-banks, 60% of the respondents to this survey still said they wanted to do it with banks. So even though it's feasible not to, the trust with the banks is still there for consumers and customers. If you could briefly just talk to partnership. So you've clearly chosen to work with Fireblocks to enable your technology stack in this space. How did you consider whether or not you would look to buy or partner with someone like Fireblocks, or whether you'd look to build it yourself?
Okay, good question. Maybe I'll just elaborate on your earlier point on why people would still, even with the capabilities of stablecoin, where you can self-custodize, you do not need an intermediary to transact. I mean, there are a few reasons why you would still have to or want to go through someone like a bank, right? First is compliance, KYC. I think that still runs through licensed entities. But I think at the end of it is still trust, right? And security. Now, you would perhaps trust the bank because they're heavily regulated, not just from the financial point of view, but increasingly these days from a technological security point of view. So the regular systems are of course part of it, but as we move towards wallets and the blockchain solutions, that becomes critical. For us as a bank, that is not a native product, or that is not a native capability. There's no, in my view, no reason for us to build that on our own. It's the same reason why many digital banks don't necessarily have to build their own core banking system, right? We work with the best in class for that. And for that reason, it's obvious for us to work with Fireblocks on this. I mean, they're battle tested in terms of security. And not just that, I think it's the network, right? Because they serve, the biggest financial institutions in the world in terms of product development and features. I mean, that is something they're in best place in the industry to understand and to push out into production. And we hope to be one of the key contributors in that design, in sharing our needs. And related to that, we also chose Fireblocks because of the speed, right? As this industry is moving so quickly, the ways of conducting transactions in trade is also moving very quickly. And in our brief encounter engagement with Fireblocks, they have been more than up to it in terms of rolling out new features, also in rolling out new chains, new tokenized products. So I think this is very important in choosing a partner. I mean, that's something we don't want to build. Rather, we work with the best in class, especially one with a broad network of our counterparties. And that just makes so much sense for us.
I want to talk briefly, if we can, about 4/7, because this is clearly one of the major benefits of using blockchain is that you can settle 24/7. But banks don't have people in offices working 24/7 today. So in the world we're moving to, where that is a key value proposition, can you sort of walk us through or tell us how have you updated your operational processes and your governance to make sure that you're providing the same level of certainty and control 24/7 in line with when the blockchain can now settle transactions for you?
This is a tough one. I mean, where we want to, from SGB's point of view, where we want to get to is definitely 24/7, 365. Perhaps not on the regular, dollar correspondent banking network, but certainly through stablecoins. I think that is possible. But we need many things to fall in place before that can happen. Stablecoins really kind of represent, by proxy, the liability side of the business. So we need also on the deployment side of business, to be able to get up to speed. So for example, on deployment side, we perhaps need tokenized money market funds, tokenized products, tokenized deposits, for us to deal with our liquidity management. But not just that, we also need a kind of scalable way to process the compliance side of payments, right? So I think that is where the other buzzword you hear today in this conference besides stablecoins would be AI, right? That's where I think agentic AI will come in. Soon we'll have agentic payments coming through as well. So that will solve in some ways or supplement in some ways customer service, right? Compliance requirements alongside liquidity management. We don't know how long that would take. We hope sooner rather than later. But on our end, certainly we are pushing for that, and we want to be the first in the market to be able to do so.
I'm going to close by asking you for a sort of prediction. Let's roll forward 18 months, 2 years. What do you think a corporate client of a transaction bank in Asia should expect from their bank?
for sure, you need a wallet. You would need to have in the infrastructure to be able to hold stablecoins for payments, and not just that, for assets as well, right? In terms of treasury management, cash management, I think that's going to be critical as well. So you fulfill two basic functions, payments and cash management. And I think for investment firms and for fund managers, I think that's going to be a game changer as well. So all of these requires tokenization, and we can see all the FIs rushing into it. So my personal prediction is in 5 years' time, this is just going to be basic. No one else is going to talk about whether we need to tokenize, whether we have to provide such service. It'll just be table stakes.
Thank you so much for your time. If anyone's interested to find out more about Fireblocks, we're at 3E07 in this corner of the hall over here. Thank you.